TFNN. Headline News Update. Here's Tom O'Brien.
Hi everyone, Basil Chapman sitting in for Tom O'Brien. This is the 10 a.m. update brought to you by Everbank, and my pleasure to be here. We're looking at a Dow down 102 at 17,847. Let's just go through this real carefully. What we're looking at in terms of the Dow is that there's a little triple double top that was made from the 18,016 level on the 8th of June, and then again at 18,011 on the 23rd of June. Then, of course, that was that Brexit high the day before the Thursday night, Friday, when smashed 600 points down. We went down to 17,063 on the Dow. V-shaped pattern all the way back, but we didn't quite make it above 18,011. We went to 18,002. And that sets up a chance that we would have a couple of days of pullback. That pullback could certainly go down to 17,004, I'd say 17,740 to 17,700. There should be some support there. And if you look at the weekly chart, you can see that huge candle from last week. This is just a bit of a filling in after that huge move up. The S&P right now, SPX.X, the S&P is down 16 at 2,086. It also had, I'll draw it in right here, it had that down trend line, and it just says, hey, if you're looking at such a huge V-shaped move to the upside, you can expect that there will be some kind of a consolidation. And here, the 2077 to 2070 area on the S&P should be support early this week. And let's go to gold. Gold right now is down. No, it's up. Sorry, $13 up 13 at 13.53. It's trying to tackle that high that was made on the 3rd, that was the 24th of June at 1362. Support for gold will be at 1326, but at this particular point, it looks as if gold is trying to tackle on the weekly basis the previous high of 1362.6 on the continuous contract to start a new leg up in the weekly chart. Very good action. So we will do the opposite here, which is, of course, the inverse, which very often happens. You see the dollar weak, but wait a minute. The dollar is up 5 cents, holding the 9-period moving average. So every 6 weeks or so out of a period of over the year, maybe 2-3 times a year for 4 to 6 weeks, you might get the dollar and gold going in the same direction, not necessarily in the same velocity, but the same direction. The dollar is at 95.70, and I suspect that it has 96.30, very strong resistance, but there's a good chance it's going to dip down and test the 95.30 level. Let's look at crude oil. Crude oil at this particular stage, that's what goes down. That's what when I was talking about gold. I mean, crude oil is at 47.33, down $1.66, making lower highs and lower lows. We'll see, because if crude oil breaks under the low that was made in the 27th of 45.83, that changes the weekly chart to say crude oil will have an even deeper decline, and then maybe the high that was made in the 52 area just the beginning of June, that's going to be tough to break at this particular point. And this is the summer driving season, so it's very interesting that that's happening. Looking at high-grade copper is in fact pulling back. In the Chapman wave, we call it a peak D top, so it's pulling back. The technicals haven't deteriorated, but the weekly chart says that is exactly where you would have expected resistance, up in the 2.23 area, and now we're at 2.18. So copper is pulling back, but it's all, just at this point, we're only calling it a pullback. Looking at the TLT, this is incredible. The TLT has gone, it's spiked up today. It's at 141.99, and the TLT is a 20-year T-bond fund. And if you look at the bonds themselves, this is leg F in the Chapman wave methodology, but it is screaming to the upside at 175 and 26.30 seconds. Not sure what's going to happen to get them to get bonds to retreat. The yield is incredible at this particular point. Low, low, low. So this is Basil Chapman. As I say, we're sitting in for Tom O'Brien. My pleasure to be here for the 10 a.m. update, evergreen, and go to the front page of TFNN for the products and call 855-750-4051. And please visit that to see about everbank.com. And this is signing off for Tom O'Brien.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.